U.S. natural gas futures climbed 4% to $2.92 on Friday, bouncing back from a 9-month low of $2.79 on August 13, driven by forecasts for stronger short-term demand and the near-full restart of Freeport LNG's Texas export plant after a brief outage. LNG feed gas flows have averaged 16.2 billion cubic feet per day so far in August, up from 15.5 billion in July. Still, prices are on track for a fourth straight weekly decline, as EIA data showed a 56 billion cubic feet storage build for the week ended August 8, while above seasonal norms, pushing inventories to about 7% above the 5-year average. Production in the lower 48 has averaged 108.1 billion cubic feet daily this month, surpassing July's record. Weather is expected to remain hotter than normal through late August, though Tropical Storm Erin, forecast to strengthen into a major hurricane on its way to the Bahamas, could cool the U.S. East Coast and alter conditions. Meanwhile, the newly released U.S. natural gas rig count came in at 122, down from 123 last week, adding a touch of bullish pressure to gas prices today. Meanwhile, European natural gas futures slid below €31, nearing their lowest level since July 2024, as markets looked ahead to the Trump-Putin summit aimed at ending the Ukraine conflict. While a rapid return of Russian pipeline gas remains improbable, any easing of sanctions could reshape global supply dynamics. Europe now leans heavily on imports from the US, Qatar, and other suppliers, competing with Asia for LNG cargoes, with Russian volumes making up less than 20% last year. Lifting sanctions could revive stalled Russian LNG projects and ease supply strains, but any shift depends on a verifiable ceasefire and reconstruction guarantees. Trump has warned of very severe consequences if Putin rejects peace, while continuing to steer Europe toward greater US LNG dependence. The natural gas market is trying to shift momentum and push back above the $3 mark. Even so, I still think any rally is more likely to fade than to hold. It is not the time of year when traders typically rush into gas, and with US temperatures staying relatively mild, cooling demand is low. For now, traders remain inclined to fade short-term pops, though a clean break above $3 could start changing that sentiment. On the downside, slipping below this week's candlestick low could open the door to $2.50. Either way, expect plenty of volatility and in natural gas that is hardly breaking news. Don't forget to like, drop a comment and check out the previous video to help support the channel, and see you in the next one.